Audiobooks all day. This is Jeff. Today we are going to be reviewing Unshakeable by Tony Robbins. Probably the best finance book I've ever listened to. Let's get to it.
Oh, let's go.
Heard of Tony Robbins just standing up on stage, doing his thing, walking around, making people feel important, making people realize their potential. Little did I know he's a humongous finance guru as well. I started this book with really no concept that he had interviewed hundreds of billionaires and millionaires in order to develop the best financial advice for you and for me, aka the lay people who don't have time to beat the market, who don't have time to have all of the resources, the financial resources available to them, but how can we secure our futures financially? That is what the purpose of the book is about. To distill some of the nuggets down for you that I learned that I found particularly helpful, especially while I am about to start, more seriously investing as opposed to just kind of passively putting into a Roth IRA, is that what he says is that you can take control of your finances without having to invest in individual stocks. But there's really two things that prevent the average investor from accumulating wealth. And the first one is fear, and the second one is fees. So he kind of goes through and he breaks down what you need to do in order to avoid those two pitfalls. One with fear. Obviously, this is something that we all get into. We see that the market is going well, then something stops going well, so we naturally think to sell. His big thing is that you need to invest, and you need to invest for the long term. So when you put down $500, $1,000, $10,000, whatever you're putting down into the stock market, obviously in a diversified thing, but we'll kind of go over that when we talk about fees. But when you invest, you need to make sure that you are investing for the long haul, that you're not looking to take it out in a couple months or in a year, that you're looking to leave it in the market forever. And that really the worst thing that we could be doing is sitting on the sidelines trying to time the market, because what we're going to lose out is the compounding interest of a dollar. So the longer the dollar is staying in the stock market, the more and more it compounds or grows over time with the stock market. It lifts. And so even though you may invest, the next day it might go down a little bit, and then you're like, dang it, what if I just waited a couple more days? I would have been in such a good position. You won't be feeling that because you know that you're investing for the long haul. Second big pitfall to accumulating wealth is fees. So what he goes into, and it's really masterful, is essentially saying that we all want the safe route. So we'll go to money managers, we're going to go to all of these different people that we feel can control our money for us. Well, the thing is that every time we transfer ownership of our decision-making ability, it has a cost to it. And specifically, I'll just focus on one way to do it. He talks about a lot of different ways that we get dinged in fees, from 401ks all the way to mutual funds, which is the one that I want to talk about. Is that when you invest in a mutual fund, there's going to be a management fee. Let's say that there's this group out there that's going to be managing your investments, and they're going to say, we're going to do awesome work for you. Well, the problem is that 96%, according to Tony Robbins, 96% of all mutual funds don't beat the stock market. So really, your likelihood of beating the stock market with a mutual fund is already low. Add on to that the fact that now they're going to be taking percentages away off of the increase of what you will be earning. Over the lifetime of your investments, you are going to be dinged and dinged and dinged, to the point where you're not going to, compared to the guy that just maybe invested in index funds, which is the next thing I'm going to go into, your wealth could be pretty significantly hampered by the fact that you will be subject to all of these different fees. So really, what does he say you should do? Well, it's what Warren Buffett would do for his wife. When Warren Buffett dies, he's one of those dudes that can beat the market. But when he dies, he wants all of his assets, all of his wealth to be transferred into index funds. So index funds are very broad, diversified, essentially mutual funds. So one really good one is the S&P 500, the 500 biggest companies that are registered, in the stock market. You can buy those, and they have very, very low fees, very, very low. It's not anybody managing it, but you can leave it in, and over the course of 10 years, you can look to see, or 30 years, you can look to see a 10% increase almost within, different decades even. And so you could be sitting there now looking ahead to the future and knowing that you could, by 10% increments year after year, be building wealth. And that is truly what it means to be financially free, is when you invest and you leave it in and you know that you are accumulating wealth. Obviously, this video isn't meant to help you in your financial life. I really don't know all that much, but what I found And so we are not liable, by the way, for any financial decisions you make. But one thing that I really learned that I took away from Tony Robbins is that you can be empowered and you don't have to be a day trader. You don't have to be the guy looking at the stock market every single day trying to see what's what. You just invest in low fee index funds, very broad and diversified. Eventually you can go into bonds and all these other, ways to kind of essentially hedge market dips. And I would highly recommend this book. It totally was blowing my mind, and I love the dude's passion. I love that he wants to bring this to us. And honestly, every single book that's bought is given, all the proceeds are given to feed America. I mean, awesome. So the dude's a stud muffin, and I'd highly recommend it. So go check it out. Thank you so much. Peace.